Good morning, good afternoon, good evening, everybody. Welcome to this episode of the No Closure Show. I'm Scott Carson, excited to be here this morning because we have a very special guest. We have somebody who has exquisite taste, who is absolutely awesome, and is just kicking butt and taking names, helping a lot of real estate investors out there. The person I'm talking about is just absolutely, she has exquisite taste in wine and shoes, which you can always trust when you have somebody who's got some good taste, who can sit down and have a glass of wine with you or a beer with you to talk about the business. And so who am I talking about? Let's give a big, warm, We Close Notes and No Closure Show welcome to our very special guest, Jillian Sidoti.
Hi.
Good morning, sunshine. How you doing this morning?
I'm doing great, thank you, and thanks for having me.
No problem. How's life out in Temecula right now?
Oh, it's great. The weather's beautiful today, so I can't complain.
There you go. There you go. Well, for those that don't know who you are, Jillian, why don't you take a second to give them your short little 2-minute bio here before we dive in. And I'm encouraging all of you guys out there that are watching this, hey, make sure you're going to listen to this because you're going to have some questions from Jillian. Because the reason we have Jillian on here is we get so many questions about raising capital properly. So, Jillian, take it away. Tell us a little about yourself.
So I'm a securities attorney. I'm in Southern California, and what a securities attorney does is helps entrepreneurs figure out how they're going to raise money for their deals. And I specifically help real estate entrepreneurs figure out how they're going to raise money for their deals. And we help them do it legally and have all the proper paperwork.
You're so much more interesting than that, though.
Sorry.
No, it's okay. I know it's early out there as well, too. So you've been practicing for how long?
Let's see, in January, it will be 12 years.
12 years. Wow, time flies,
yeah.
Huh?
Yeah.
So let's talk about a couple of things when it comes to raising capital, because you are really good at, especially a lot of the crowdfunding things that are going out there in the industry. And let's talk a little bit about some of the changes that have taken place in the last few years. Why don't we, huh?
Well, the big thing is, back in 2012, they had the Jobs Act passed. And so what we have seen happen is that more people are now advertising for investors because there's a couple of different rules that allow you to advertise it for investors. And one of those rules is 506C as in Charlie, which allows you to raise money from accredited investors only. And you can do general solicitation, but you have to verify that those investors that are coming in your deals are actually indeed accredited. For those of you that don't know, an accredited investor is somebody who makes $200,000 a year as an individual, $300,000 a year as a married couple, or has a net worth of $1 million exclusive of primary residence. And so, those numbers, that amount of money is only about 3 to 10% of the population, depending on what statistic you look at. So although there are a lot of accredited investors out there, if you think about it, we have a country of about 300 million. So you're looking at about, and actually I think it's 350 million, right? So you're looking about 10.5 million people are actually accredited investors. So they are out there, but it is a very small part of the population. So definitely something to think about when going out and raising private capital. But the other thing is too, to think about when you're dealing with investors is, and 506C and advertising, people don't respond well to, brash ads of, I need investors. It seems desperate and it doesn't work. So think about that before you get all hot and bothered about using a 506C offering and raising money that way.
Would you agree that investors want to see something tangible in a deal before just seeing, before pledging funds in theory?
Well, I mean, you should have your stuff together, right? Ads like, I'm offering a 15% return secured by real estate means nothing to anyone. So I just think like that kind of advertising has never worked, and it's not going to work now, whether you are able to do it legally or not. So you have to think about, educating the investor before even asking them for anything. The investor's going to come to their own conclusion. If you educate them enough, they'll come to their own conclusion on what they should do and how they should invest. So if you go out and talk about your note business and how your note business is going, and what you are planning on doing with your note business and why you're seeing good deals here or there, people are naturally going to ask, how can I get in on this?
Yeah.
If you're educating them enough and you're showing them that you're an expert. So that is education-based marketing, and to me it's the best type of marketing and the marketing you should stick with. And also, if we look at the statistics, the old rule where you couldn't do any advertising was called 506, and then that changed into 506B, and then 506C came along where you can do advertising. And I pulled the statistics last June, and the 93% of the offerings that have been done since 506C was enacted are 506B offerings, which means that only 7% of the people who are doing private offerings of that type are actually going out and advertising and using 506C and only accredited investors. So there's something to be said that there's value still in doing a marketing approach where you're marketing your company and not your opportunity.
That's huge. I think that's a really great aspect. I love what you're talking about, how to educate the clients or educate potential investors, because that gives them the real knowledge of, because a confused brain is a no brain. I think we could agree to that, right?
Yeah. I like that. That's funny.
Confused brain is a no brain. But that's the thing. I've always been a big believer that investors, they want to first know that they can trust you. The first that you know what you're doing is, can they get their money back? And I think really return on investment is kind of the third or fourth thing that they really think about versus giving it away, right?
It doesn't matter how much the return on investment is if they can't trust you.
Right.
So
that's a trick.
There you go.
Now you have done some pretty cool things out there with your guys' firm, and I forgot to mention Jillian is a partner in Jillian Sidoti LLP. Website is crowdfundinglawyers.net. We should have said that at the get-go. I apologize there. But you've done some Reg A's out there as well for some people. And why don't we talk a little bit the difference between 5/6C and a Reg A as well?
So the new Reg A Plus is also from the Jobs Act 2012, and it allows you to raise up to $50 million. You have to get SEC approval to go out and raise any capital. But once you go out and get the approval from the SEC, you can actually advertise for any investor. So you can advertise for accredited or unaccredited investors. It doesn't matter. There are some rules on how much each investor can actually invest, but it does give you some freedom to go out and raise capital. So one of the deals I did, it hasn't been approved yet. You can't invest in it yet. But one of the deals I did was Grant Cardone. If anybody out there knows Grant Cardone, I did his Regulation A Plus. And I also did one that's out there right now called Tulsa Real Estate Fund, which raised a lot of money in a very short period of time, all through social media. So you can check them out as well. And also a couple of other, real estate funds out there. I do have a mortgage fund down in Florida, so you can do a note fund. That is possible. So lots of different opportunities out there.
Mm-hmm. So when somebody's thinking about putting a fund together like that, what are some of the things that they should consider?
Well, the first thing you got to consider, okay, if you're going to do a Reg A Plus, first of all, you should really go out and try to raise money under 506. Do not have your first time of going out and raising money be under Reg A. Now, if you have great marketing and if you've done stuff before, or you have a cadre of unaccredited investors who are good people who will invest well and are at least somewhat educated investors, then a Reg A might make sense. But the reality is you need at least $75,000 to get a Reg A up and going. And if you don't already have the market for the Reg A, the Reg A itself is not going to do anything for you. It's not going to be like a magic bullet. So, I probably turn away more clients than I take on for Regulation A. I probably talk more people out of it than I talk into it, because I don't want to take anybody's money who's not ready to do one, who's going to fall flat on their face and not be successful in raising capital. So that is a big thing that I insist that people have it together and a network big enough to support doing a Regulation A plus. Because there's a lot of stuff you have to do. You have to get an attorney that's going to get it through the SEC for you, and then you also have to get, an auditor to audit your books, and it's a process. So if you're not ready for that process, then stick with 506. There's nothing wrong with that. And I have clients who signed up with me to do a Reg A and then changed their mind and went back and did 506s. So, it's not a magic bullet.
Hang on a second.
There you go.
Exactly. So let's talk about some of the things people can be doing to kind of identify or discuss with investors if they're credit. Because some people are very touchy about the finance. How much do you make and things like that. And I think you have to get over that hurdle if you really want to be doing some big things and realize that those are just normal conversations when it comes to investing, right?
Right. Exactly. And so, people always say to me like, oh, is general solicitation when I'm having a one-on-one conversation? And no, it's not. General solicitation is when you go on Facebook and ask people to invest. General solicitation is when you put up a website saying, do you want to make 12% on your money? Call me today. General solicitation is sending out a mass email. General solicitation is not, having a one-on-one conversation with somebody about your business and what you do. And I always find I never get a response from people if I go, call us today to do your Regulation A and keep it at that. Or call us today so we can help you realize your money-raising dreams. Because what happens is, first of all, if I did that, it's two things. One, it's not going to be effective, and the people who do call me are going to expect me to raise the money for them, and that's not what I'm doing. So education-based marketing, me talking about how to do a Reg A and what it entails and why or why not you should do it is really the way I get people into doing Reg A's with me, or 506Cs or 506Bs or any kind of offering. That's basically, I practice what I preach in doing education-based marketing. We don't buy any paid ads for our services or anything like that. It's all education-based marketing. And I encourage you, even if you're not looking to raise money today, is to stick with education-based market. Educate your audience, educate your potential investors so that they come to the logical conclusion that they should ask you about investment opportunities instead of the other way around. And it will happen. People don't believe me, but you got to give it some time.
I believe you, Jillian.
I do appreciate that.
But that's so many people don't have the patience for it, right? Mm-hmm. This goes into kind of marketing. We've had people on talking about marketing, but just talking about kind of creating content about the types of deals you're doing, the goods, the bads, the ups and downs, how you're finding deals, things like that. That's all great stuff. That's educating your client base. Mm-hmm. To see about giving. It's not soliciting. It's just, hey, here's a life of a note investor, a real estate investor, right?
Right. And that's exactly what you want to do. It's so funny because I did invest in notes for a short time, and I haven't invested in notes for a while. Just because I haven't had any opportunities. And, somebody like me would benefit greatly from hearing about how people are finding deals and where they're finding deals right now, especially because we're coming out of a really great economy. So somebody like me who's not in the note business is under the impression that there's no great note deals now. You, Scott, probably tell me totally differently. And those are great, talking points. Like, even though the economy's great, there's still great deals in buying notes. Or, get people prepared for the next wave. I mean, I remember during the last downturn, I would have banks call me, or people call me and say, I can buy a $30 million package of notes for 3 cents on the dollar.
Wow.
Amazing stuff like that, 2008. And so maybe you want to tell people to get ready for that because you know where to get the deals, or you have the contacts or whatever, and when the next shoe is going to drop.
That's the truth, because we're starting to see stuff. I don't think we'll go back to that pricing again. If we do, we're in a lot of hot water across the board.
I'm not as optimistic as you. I have to be honest. I really feel like consumer debt, and I don't have any hard statistics for you, but I just sit here in Southern California. I see the houses being built. I see what they're charging for those houses. And I just don't understand how people are purchasing them. I don't. we don't have, I live in Temecula, and we don't have, the industry that San Diego has or Orange County has. So a lot of people are commuting, and it's just that's not going to last. So
I agree with that.
I believe we're building future ghost towns.
There's not really any job growth driving GDP. It's all based on, or especially the housing market and things like that. It's all based on, demand for the most part, but there's not any job growth. There's not any industries that are being driven to drive that stuff up. It's all just on demand and people getting crazy and they keep thinking that the market value is going to keep going up, which we all know at some point it's got to stop, right?
Right. Well, and that's kind of how I see it. Like, that's exactly what's going to end up happening. So I think there's a huge, again, I don't have any statistics for this, but I think there's a huge opportunity in the note business coming up here real soon. So if you're out there and you're trying to make it in the note business, now's the time to start educating your corral of potential investors, because it takes time to educate and build trust. It's not going to happen overnight. So don't for a second expect like, oh, I'm going to go out and put a Facebook post on all the deals I'm finding and everybody's going to flock to me to find out. It's not going to work like that. And look how long you've been doing it, Scott.
I've been doing this for a decade, over 10 years now.
Yeah, so there you go.
10 years now, and I started off just educating people on stuff. I was wholesaling. I would get lists from banks, and I didn't have the capital to do it, so I was wholesaling off to other investors, or I was sharing the types of deals that they were good, and I was doing the due diligence to break down the deals, and people were buying those assets from me. And at some point, like, well, I don't want to do the work. Can I just invest with you? That's one of the biggest things that I could say is just it came from people seeing, okay, here's the types of deals that Scott's doing, or that, I want to get in, but I don't want to do the work. Can I write you a check? And we get involved with it.
But that's what I'm saying. Like, I do most of my best investing by investing with others and not doing it myself. So, that's why I completely, encourage people to invest with people who know what they're doing, A, and B, if you don't feel comfortable or understand that there's a bunch of people out there that are like me, that don't want to do it themselves. But one thing I always say is, and I'll never forget when I first started practicing law, right before I graduated law school, a very wealthy attorney said to me, Jillian, the smartest people are not lawyers. The smartest people hire lawyers. So, I always have that in the back of my mind, like that, the smartest people hire lawyers. I'm not the smartest person. So I think that's something to consider. There's a lot of lawyers, doctors, engineers, what have you, who aren't going to quit their jobs because they're a little too comfortable. I'm one of those people. Are looking to somebody who's a little more entrepreneurial in spirit.
That's true. Now, one of the things I love doing is you go out and raise capital. You've done some interesting things to raise capital for some of your different projects. I think didn't you win a tennis club membership or something like that, or bid on something to go hang out with people too?
Yeah. So I've never gone out to raise capital because I don't have anything I'm raising capital for. But I do believe in good networking, and it's not like I've never networked. Well, that's not true. To say I've never networked for business is ridiculous. But I've never networked with the intention of any specific intention. I just know that if you put yourself in certain situations, your network will get better. You'll meet people that, perhaps will elevate you in business and in life. I mean, it's not just about business, right? So for example, I bought a charity auction to the Malibu Tennis Club. I don't play tennis, and I don't live anywhere near Malibu, and I don't know what I thought. But I thought, it was cheap. It was like a cheap thing, and so I thought, then I could go up there and sit at the bar or the clubhouse and network with people and meet people, and just learn, and observe and things like that. Another thing I learned was sitting in first class and talking to the person next to you. I have met the most, no business relationships whatsoever, but fascinating, awesome people that I've met. and I've maintained relationships with quite a few of them. So, like really just cool people to meet, for sure. And so stuff like that.
Totally agree to that. Totally agree. First class, or when you buy good tickets to Guns N' Roses.
Oh, yeah. I know. Thank you.
Or sporting events.
Scott bought great tickets to the Guns N' Roses concert, and then he couldn't use them, so he gave them to me. It was awesome. I loved that show. It was awesome.
Well, I accidentally bought 2 sets of tickets. 2 sets of tickets. I was like, what the hell? Jillian, you want to go? I know you enjoy rock and roll.
It was so great.
Exactly. But that's the thing. You hang out with people, you visit with them, you get a chance to know them. You don't go in there, hey, do you want to fund my deal? That doesn't work that way. That's a big red flag.
You never expect it to work that way. You're just building relationships.
Mm-hmm.
You will eventually magnetize these people to you just based on how they get to know you and the relationships you maintain.
Mm-hmm.
Don't get insurance salesmen over it, for sure. Because by the way, you don't want regretful money. You don't want people who hesitate writing that check. You want people with enthusiasm writing those checks. Because the minute they get a little nervous, don't take their money. It's not worth it for you or for them. The anxiety's not worth it. And I'm telling you, you will have people who will gladly give you money. It's just going to take some time, patience, and work and trust, and huge trust building.
Mm-hmm. Definitely. What are some of the things? Actually, let me bring this back, because I know I've referred clients to you because people are like, hey, they're trying to put together a joint venture deal. Because you do a lot of that as well, helping people with individual JV deals versus maybe not a fund, but help them kind of structure for a bigger deal, right?
Right. Exactly.
Mm-hmm. So that's always a good thing. If you're getting things rock and roll, and reach out to Jillian, you'll spend some time with them, talk about what they're trying to do, and kind of help them on the course to make sure they got their T's crossed and their I's dotted, right?
Exactly. And, I don't do a lot of those JV agreements anymore, only because they were costing too much for the individual. The risk for us was really high, and the cost for the JV, the person trying to do the JV agreement, it was too much. And I understood that. So I have developed a software that we have been using with one of our clients. They've been trying it out and using it, and it's been going well for them, and they enjoy it. And so hopefully we'll be launching that on the masses here real soon, and you can try it out as well.
Awesome. Now you've got a big event upcoming here too, don't you?
Oh, yeah. Okay. I wrote it down so I wouldn't forget the details, because I'm that person. So if you go to our website, crowdfundinglawyers.net, you can sign up for our ultimate crowdfunding workshops. You can come and learn everything you need to know about crowdfunding your deals, going out and raising money from your friends and family, and how to put the structure together, how to market for it, what the legal documents look like, how to structure your company, and how to do that. And it's on December 6th and 7th in San Diego at the Westin. So if you just go to our website, crowdfundinglawyers.net, you can sign up right there.
Mm-hmm. And it's a 2-day event, and you got to tell Jean I said hello as well.
I will. Yes. And so it's myself and my partner Jean Trowbridge are hosting it, and then we have we have 2 other attorneys from our office that will do some speaking as well, but it's mostly Jean and myself.
Mm-hmm. But it's 2 days, and you guys talk about some things that you dive in through those 2 days.
Okay, so the first thing we start off with is, okay, how do you structure your company? Where are you supposed to form your company? Why do you want to do it this way? How do you set up your management team? And then we go into, okay, now here's how you put an offering together. Here are the rules. We go through the law and all the different laws. We go through the different investor types, what the investors are looking for. Then we talk about how to structure a deal with, do you use a preferred return? Do you use an equity split? Do you use an interest? Do you perhaps do a hybrid of the two? Do you use 506B or 506C? When would you use 506B or 506C? Then we talk about marketing, and we talk about this education-based marketing and how to do it, and the right ways of doing it, the right ways to use social media and things like that. So, and it's 2 full days. So I know I gave a very quick synopsis there of what you can learn. But it's actually a whole lot of stuff packed into 2 days, and we give you free drinks on the end of the first day. So you come for the cocktails. Come for the education, stay for the cocktails.
I love that. That's a hashtag we got to put there. What mistakes, what do you say is the biggest mistake you see people make out there that just drives you bonkers, Jillian?
Okay.
Not through that on the left field there, but hey.
No, not at all. Because I actually have two of them, but I'll go with this one. The biggest mistake you can make is offering more than you need to or actually can. So I see this all the time where people are like, I have to pay my investor, and I'm going to just give you a ridiculous number, but I have to pay my investors 15%. They insist on getting 15%. That's not true. They don't insist on that. You're believing that they're insisting on that. If the deal doesn't pay 15%, then you can't offer that. And if the deal pays 14%, you still can't offer that, or 13 or 12. You have to really kind of work backwards when you figure out what you're offering your investors. So the thing you always want to start with is, how much do you, the person who's doing all the work and giving up the time you can never get back, how much work do you have to do? How much is your time worth? And so if you figure out what your time is worth, then you work backwards from there. So my time is worth X dollars. I believe this deal is going to make Y dollars. If X minus Y is a positive number, you see where I went with that? Let's do it another way. Y minus X is a negative number, then you can't do the deal. The deal doesn't work, right? So let's start with that. So you get rid of that deal. But let's just say you have a deal that's going to work, that's going to pay you what you want and have some money left over. Now, the next thought would be like, oh, okay, then what I'm going to pay my investors is the money left over. Nuh-uh. What you're going to pay your investors is the money left over less a contingency fee, and that's what you're going to pay your investors. Because if you don't build in mistakes, you will for sure have problems down the road. You will struggle to pay your investors, and that is the worst thing in the world. Even if you pay your investors something, if you don't pay them what they told them you were going to pay them, they're going to be disappointed. So it's better to tell them you're going to pay them 9 and pay them 10 than to tell them they're going to pay them 9 or tell them you're going to pay them 10 and then pay them 9. So like I want you to get in the habit of, I need to get paid something. What do I need to get paid to make me happy? What's the deal going to make? The difference between the two of those, less the contingency, that's what I can offer my investors. And it might be 2%. And if it's 2% and you think no one's going to buy that, then either cut down what you need to make or cut the deal. The deal's not going to work. So that's really how you should be thinking about this. Do not work with your investor in mind first. Because, and I don't mean that in the sense of like you shouldn't be working for your investors' money and being a good steward of your money. I'm teaching you how to be a good steward of their money. Because for you to make promises you cannot keep is not being a good steward of their money.
Amen to that.
No matter how good your intentions are.
Yep. Don't give them the farm if they don't ask for the farm. If all they want is the chicken coop.
Yeah, exactly. Right? That's a great analogy. I like that one.
You can use it. I'll give it to you.
Okay, I'm going to.
Now I got to ask, what's the second thing, since you volunteered? You got 2 things that are really big pet peeves of yours.
Oh, well, the desperation. Okay. So the desperation's always a problem. Like so whenever anybody runs out on Facebook and goes, I only need $100,000. Will you help me? Like I had somebody who friend requested me the other day. Now this wasn't an investment, but hold on, I'm gonna look for it. Hold on. They friend requested me the other day and then sent me a message. And I hadn't accepted the friend request, so it went into my junk messages. But it comes up and says, this person wants to talk to you. And I say, hey, Jillian, hope all is well. You're an investor, right? Do you buy in the Georgia market? I have 2 single family turnkey cash flowing. Like, what how do you do is that? I'm not writing that person back, and I ain't accepting their friend request. I don't need to be solicited blindly. So, yeah, there you go.
People were doing some big things out there. We were at an event one time where somebody was talking about guaranteed 12%.
Oh my God.
Big signs.
Oh my God. That's just like that's a no-brainer. That's not even on my list anymore, because if you're doing that, like, don't even come to me.
Right.
You can't guarantee anything. You're not an insurance company.
Amen to that. So once again, everybody, December 6th and 7th, that's a Thursday, Friday, in lovely San Diego. Got the Wolfman, Jeff Wolf, is all excited about that there in San Diego, one of our students there. And Lauren says you guys are doing breakfast on both days and lunch on day 1 too?
Yeah.
Very nice.
We treat you right. So, and the other thing is too, about the event is, like, who doesn't want to go to San Diego in December? I
know, right? I'll be in Cape Coral on the opposite side of the coast. Otherwise, I'd be there. If they can't make it, do you have the next date scheduled for it by any chance, or no?
Yeah, we have one in Orlando, and I don't know if that's in February or January. Okay. I don't know. Lauren, maybe you can tell them. Lauren's on here somewhere.
Lauren is on here. Lauren, if you know the dates for it, please post it there. We're glad to see it. All right, here's a good idea. We get... Oh,
I'm so sorry. Hold on. Let me turn that off. Oh, my gosh. Sorry. Okay, there we go.
Jill DeWitt asks here, any tips for only putting investors in touch with individuals with great deals? I don't quite get the question, Jill.
Like, I would just make an introduction. But you can't get paid for that. So if you're looking to get compensated for that, don't look to get compensated, because the problem with doing something like that, and then you getting compensated because the investor invested, you could look like an unregistered broker dealer and get yourself in some trouble.
Mm-hmm. I've had people come to me and say, hey, I want to raise capital for my friends and then put it with you, and I want to get paid a fee. I'm like, we can't do that. Sorry.
Yeah, no.
Yeah, you're not an investment advisor. You don't have a securities license. We can't do that. Dates aren't firm yet, but it will be in February in Orlando. So as soon as you get those dates, let me know, because I need to get out to one of yours. I have not been yet. I was trying to make the Vegas one last year. Couldn't make it. So I'd love to be there. So once again, everybody, December 6th and 7th in sunny San Diego at the Westin. What's the ticket prices for that, Jillian?
$9.95.
$9.95. That's not bad at all. And I guess they get a workbook and some other things that go along with that as well, too, right?
They get what?
You have a workbook or a manual?
Oh, yeah. They actually get 2 books. They get my book and Jean's book, and then they get all the slides from the event.
Awesome. So and you guys, you're doing in 2 hours. You got a webinar you're doing this. I'm really excited about too for a lot of people. New Pacific, creating a rocking investor presentation. I meant to bring this up here. We'll put the comments. So if you're watching this on Facebook Live, great. The link, Lauren just put that in the comments there. If you're listening on iTunes and Stitcher and all that stuff, are you guys going to record that webinar by any chance, Jillian?
Yeah, we are, but there won't be a replay. So, because it's going to actually be part of my home study course. So you got to either see it live or buy it as part of the home study course. Sorry.
You want to talk a little bit about your home study course?
What's that?
You want to talk a little bit about what goes into your home study course?
Yeah, I'm actually going to be releasing it on November 2nd. And it's going to be a monthly charge. So if you get sick of it after 1 month, you can cancel and no hard feelings, or you can continue on. It's going to be a continuity program where I'll give you some coaching too along the way. It's not a $30,000 coaching program. It's not you have to buy this whole entire thing for $1,000 and call it a day, or $2,000 or $5,000. It's going to be, a low monthly rate. And then also you'll get some coaching along the way. We'll have little mastermind meetings, and we'll also have a lot of new content as we go along.
Awesome. Yeah, great stuff. I'm looking forward to that. That'll be some great stuff out there. So once again, everybody, you can go to crowdfundinglawyers.net is the website there under the event thing. Get signed up at $9.97. Trust me, Jillian, Jean, and the whole team over there is just amazing. They're the people that we send all our clients to come to me. Hey, we need some help. Call Jillian. Call Jean. We're one of your biggest raving fans, Miss Sidoti.
Thank you. You guys are awesome. Thank you so much.
No problem. And Steph says, "What's up?" Thumbs up there. Good stuff. All right. Well, Well, hey, Jillian, thank you so much. We know you've got a busy morning ahead of you there, getting ready for the other webinar you're doing, but thanks so much for being here on the Note Closer Show podcast. The best way for them just to reach out to the website to get a hold of you?
Yeah, just go to the website and you can make an appointment with Jonathan or myself if you're looking to do a deal. So just go on over there and check us out.
Awesome. Thank you so much for being on the Note Closer Show.
Oh, my pleasure. It's really my pleasure. Thank you, Scott, for having me.
You're welcome. Hey, and you're going to be on Note Camp too. You're good for a seat on Note Camp November 15th through the 18th too, correct? Like always?
I am now. Just let me know.
You should know you have a standing invite always.
No, that's sweet. Oh, thank you. Yeah, I'll do some. I'll come up with something new and fresh and exciting for Note Camp.
All right, awesome, good stuff. Well, hey, have a great day. Give a big high five to everybody over there at the team. Okay.
All right, bye. I'll talk to you soon.
Thanks. All right, guys. Hey, that's going to wrap it up. Jillian's always got some great stuff. She is the queen of crowdfunding. Like you've heard her say, done some big things, done for Grant Cardone, done other things. She's the attorney we use and the attorney that we recommend to all of our mastermind and coaching students out there as well, because she's just a straight shooter. She'll tell you exactly, hey, this is going to work or it isn't going to work. Hey, this is in your budget. It's not in your budget. And she's just phenomenal. So take the time, reach out to crowdfundinglawyers.net, and you will not be disappointed. Note Camp, if you're interested in Note Camp, go to notecamp.live. That website's being updated here over the weekend about our upcoming Note Camp convention slated for November 15th through the 18th. That's a 3.5-day online Note convention with 30+ Note educators and speakers like Jillian coming on to share nuggets in the Note industry and their specialty to help you out as well. We'll have vendors, investors. It's all focused on content, actions, marketing, and profit-generating nuggets for you. But once again, check out Crowdfunding Lawyers event there, December 6th and 7th in San Diego at crowdfundinglawyers.net. Otherwise, guys, go out, make something happen, and we'll see you all at the top, everybody. Bye.